Okay, let's dive into this. If you've been glancing at the news lately, you've almost certainly seen those bold headlines screaming about the total collapse of the US dollar. But what's actually going on beneath all that noise? Welcome to today's Explainer. We're going to untangle what is honestly one of the most high-stakes financial dramas playing out on the global stage right now. We're stripping away the sensationalism to look directly at the real data, the shifting alliances, and the new tech challenging the old financial order. Let's get right into it.
50 years. That number is absolutely crucial. It represents the lifespan of the monumental U.S.-Saudi petrodollar agreement. This arrangement was born back in 1974, and it basically said that Saudi Arabia would sell its oil exclusively in U.S. dollars and then invest those proceeds into U.S. government bonds. All of this in exchange for American military protection. This was the bedrock that cemented the dollar as the world's primary reserve currency. But on June 9, 2024, that exact 50-year agreement quietly expired, and Saudi Arabia simply chose not to renew it. That quiet expiration acts as the primary catalyst for the massive geopolitical and financial shifts we're exploring today.
Now, what's really interesting about this slide is exactly why the Saudis let that historic agreement expire. The entire center of gravity for global oil consumption has drastically shifted eastward. Look at the numbers here. Back in 2000, 38% of Saudi oil exports went to Europe and North America. By 2022, that had plummeted to just 18%. Meanwhile, their exports to China and India surged from a tiny 6% to a massive 48%. So the economic bedrock of the petrodollar has fundamentally altered. Saudi Arabia's biggest customers just aren't in the West anymore, and that completely rewrites their entire financial incentive structure.
Section 1. BRICS expands its reach.
So, with the petrodollar era officially wrapping up, this newly expanded BRICS bloc has stepped right up to the plate. And listen, this isn't the same BRICS from 10 years ago. It's grown into a massive 11-member coalition, adding heavyweights like the UAE, Iran, and Egypt. What unites such an incredibly diverse group? It's really a shared frustration with unilateral Western sanctions and the weaponization of the US dollar. To protect themselves, they are actively hoarding hard assets. This coalition now controls roughly 50% of global gold production, and their combined central bank reserves hold over 6,000 tons of gold, driven largely by huge, sustained buying from Russia and China.
Section 2. The financial weapons.
Okay, so BRICS clearly has the gold and they have the motive. But how do you actually fight a currency as deeply entrenched as the dollar? Well, to understand how fast they're moving, just follow this timeline. We go from the end of the 50-year petrodollar era in June 2024 straight into rapid technological mobilization. By October 2025, researchers launched a pilot for something called the BRICS Unit. And just a couple months later, in December 2025, an IIRAS blockchain-based prototype was officially released. The speed here is just staggering. They aren't just talking about de-dollarization anymore. They are literally coding the infrastructure for it.
And this brilliantly illustrates what exactly this new BRICS Unit is made of. The prototype is anchored by real-world value to ensure it stays stable. You can see that 40% of its valuation comes directly from physical gold. The other 60% is a basket of BRICS national currencies. That 60% is sliced evenly into 5-12% shares: the Brazilian real, Chinese yuan, Indian rupee, Russian ruble, and South African rand. It's designed this way intentionally to buffer against the wild volatility of any single national currency.
But let's demystify what this actually means in the real world. The unit is not a new circulating currency like the euro. You're not going to use this to buy a cup of coffee. It is purely a neutral settlement tool. Its entire purpose is to let these nations settle massive, cross-border trade invoices without ever touching the U.S. banking system or the SWIFT network. It is a calculated way to completely bypass the reach of Western sanctions.
Section 3. The digital currency bridge.
Now, gold-backed units aren't the only tool they're building. As India takes over the BRICS chairship for 2026, they're heavily pushing the bloc toward a CBDC bridge. And to be super clear here, we are not talking about volatile cryptocurrencies like Bitcoin. We are talking about official, wholesale central bank digital currencies, things like India's e-rupee or Brazil's Drex. This bridge creates a platform where, say, a business in India can pay a supplier in Brazil directly using their own digital currencies. It entirely cuts out the US dollar as the middleman, which drastically drops transaction costs and speeds up settlement times.
However, it's absolutely crucial to understand that the BRICS coalition is not some perfect monolith. There is a lot of internal friction about what the ultimate goal of these tools should be. On one side, you have nations under heavy Western sanctions like Russia and Iran. For them, complete de-dollarization is about absolute survival. They want to weaponize this technology to entirely replace the dollar.
But on the other side, members like India and Brazil have a much more moderate approach. They don't want to drop the dollar entirely, they just want to build a neutral, interoperable backup system to protect their own monetary sovereignty from external policy shifts. Naturally, the United States isn't just sitting back and ignoring all this. The response from Washington has been intense. U.S. President Donald Trump proposed some sweeping economic pushback, explicitly threatening 100% tariffs on any BRICS nation that actively works to replace the dollar. On top of that, the U.S. has introduced executive orders aimed at restricting domestic central bank digital currencies, citing privacy and financial stability risks. It's a very clear signal of an America First policy intent on protecting the dollar's supremacy through an aggressive trade posture.
Section 4. The U.S. Dollar Reality Check. Let's move to and see how this builds our understanding of the actual economic landscape.
Because we've looked at the geopolitical hype, the flashy new prototypes, and the political threats. Now we need to ground ourselves in cold, hard economic data. When you look at IMF figures tracking global foreign exchange reserves in late 2025, yes, the US dollar's share has definitely dropped. It went from about 65% a decade ago down to 56.92%. But look at its closest ideological challenger, the Chinese renminbi. It's sitting at just 1.93%. So despite all this momentum and news around BRICS, the US dollar still massively, overwhelmingly dwarfs the competition when we're talking about the trust of global central banks.
And here's a really crucial nuance that almost always gets lost in those flashy headlines. You might read that Russia is now settling a massive 90% of its trade with BRICS partners in local currencies. That is a fact, but it's driven largely by necessity and sanctions. If you zoom out to the entire planet, 89.2% of all global foreign exchange transactions still involve the US dollar. So a localized shift within the BRICS network simply hasn't dethroned the dollar's absolute dominance in global liquidity.
As financial expert Davina Mehra points out, we really have to separate these sweeping geopolitical narratives from actual market discipline. Historically, financial markets tend to detach from geopolitical shocks within about 6 to 12 months. And the alternatives that BRICS are proposing, they have their own massive flaws. Gold is highly volatile. Remember, it once took 27 painful years for gold to reclaim its 1980 peak. And cryptocurrencies regularly suffer stomach-churning 70 to 85% drawdowns, which makes them functionally useless for settling sovereign trade. At the end of the day, despite U.S. debt and political turbulence, the deep, unmatched liquidity of the U.S. dollar means it remains the world's indispensable safe haven asset.
So, what does this all mean for us? We are absolutely witnessing a fragmentation of global finance. The 50-year era of the petrodollar is over, and BRICS is successfully building the technological rails for an alternative system. But an alternative is not the same thing as a replacement. Which leaves us with this final provocative question to consider. Is the US dollar's absolute dominance actually ending? Or is it simply, for the first time in modern history, being forced to learn how to share the stage? Think about that the next time you see a headline about the collapse of the dollar. Thanks for joining us for this explainer, and keep your eye on the data.